All right, welcome back everyone to Capital Mindset ICOM. We have our guest with us today. We're going to have a pretty interesting discussion on a few stocks here. We're going to get right into the introductions. Go ahead and introduce yourself.
All right, so I'm Dan Bustamante. I'm the founder of Bustamante Co. We're a long-short equity hedge fund. And we also run Long Vault Report, which is a cross-asset investing report we started publishing back in 2020. We send it out across the world to a lot of financial advisors, independent traders, and that gets sent out every Sunday. And that's kind of it.
And the stock we're going to be getting into today is one that all the members have been familiar with some of the discussion we've been having over the past couple of weeks, and that's Boeing is the first one, because actually we just found out behind the scenes that we're going to talk about another one that Andrew's going to be really excited to get into, and as well as myself. But let's get into Boeing. So Boeing, I am the average Joe looking at this stock. Stock's down quite a bit. I hear news headlines all the time, problem after problem after problem. Why should I be interested in Boeing?
Okay, so I think we all found each other because I posted, or I did an interview with another Substack, and then I think one of you replied to it. My thesis is pretty simple on this. Okay, if you go back and you look at what happened to the company, I think it's a standard turnaround situation. But in short, they're going free cash flow positive and basically end of this year. It's speeding up. Number two, I think the most important thing is it's a duopoly. Okay, and every time I've tried, I think you guys said the same thing when you replied to what I tweeted. Every time I talked about this company or investing in a company, there's really nothing better. I mean, if you go to invest in Visa, MasterCard, American Express, there's all these companies you have to compete with. But with Boeing, you have Airbus, you've got Boeing, okay? And everybody makes a big deal. I mean, obviously, the headlines come out. You saw that China reject the planes. Literally a week later, India's like, look, we'll take them. Obviously, repainting those planes isn't cheap. But in short, it's a duopoly. The cash flow is going positive. And you finally have a CEO, which I think is important given the history of the company, who's actually an engineer and knows what he's doing. So,
okay, and I think that last part, a lot of people had criticisms for quite some time, just saying, "Hey, this company was doing a lot of things where it was almost separating from its engineering history." They had a finance guy, like say bean counter at the top, and they weren't, where the engineering teams were. They were far away. So. Yeah, what were you going to say, Andrew?
No, I was going to say that last point. So I think super important. Like the fact that you have a CEO that's an engineer that actually understands what's going on. Because like, dude, if you got me into Boeing, I'd be like probably looking like because one of them was I think a CFO, and he was looking at like doing cuts and kind of optimizing. And that's like the last thing you need at a turnaround. You need someone that understands the business and can actually drive it forward. And one of the things I thought is really important too, and maybe we'll touch on this a little bit. Boeing had been in the penalty box because of their QA issues, and it, especially through the CEO, and like I said, that part of the turnaround. And just from discussions I've had, it very much seems the QA issues, you can't say they're over because like at any moment something could happen, but they seem to be mostly fixed. And now it's a ramp story into a free cash flow story. And I think for the most part, the market's waiting to see that actually happen before it's going to fully react to it. I mean, it's reacted a little bit from like the sell-off, but I really think, and I know we've talked about this, Fabio, and they said in the earnings call how much they're focusing on that ramp in production, which is, to your point with the duopoly, these guys have so much demand backlog. I mean, irregardless of the economy, they'll have demand. So it's all internal.
It's interesting. When I spoke to this journalist, Phil Rosen, I think that's the thing I posted on Twitter, and he asked a question. I'm curious your guys' take too. He goes, like, what macro aside from China do you see affecting this? And my only reply that I could see when we were going through this to try to figure if we were going to put money into it, was the broad market. If the broad market, which we saw the GDP number come out today, if that gets worse and worse, I think it just drags down the name regardless of the rest of the market. So I don't know what your guys' take is on the macro side, but that was kind of my view.
Well, yeah. You go first, Andrew.
No, I mean, to your point, I mean, as far as if the general market sells off, sure, Boeing will go down. I think fundamentally, though, when you look at, we have had a plane shortage for a while, and we've talked about this. One of the things for the last 2-3 years, companies that did really well were air leasing companies because, to your point, Boeing had to slow down demand, and there was literally no one else that could fill it because you're a duopoly. Like I think we joked once, if this wasn't such a strong duopoly, Boeing would be dead because all the mistakes they've already made. And so I don't see like fundamentally demand side any slowdown, even with the China situation. I find the China one so funny because I think we've talked about this. Do you know President Xi's plane is a Boeing? Like,
I didn't know that.
yeah. So
It's a
his own plane is a Boeing. His custom-made plane is a Boeing. So, and one of the things, I don't know if you saw this, China came out and said they said they reduce tariffs on certain things, and even though they said they weren't going to take the Boeing planes, they were like, oh, we're going to allow air leases or leased airplanes to still come in untariffed or something like that, which to me signals they're still going to take the planes. So to me, I don't see anything that's really going to hinder the demand or the actual fundamentals of the company. Yeah, you might have some like pullback on the price because of macro, but I think they're, compared to any other company you're looking at, pretty recession resistant at this point.
Yeah, and just to add to that, I guess on just like the macro backdrop on kind of like I've been trying to shift through a lot of the noise and trying to focus on what might be some of the key drivers, and I think it just comes down to consumption, because like one thing that some of the banks have been saying is that if we don't have sustained increase in unemployment, any slowdown in consumer demand temporarily could be something that's quickly snapped back. Because if you look at the breakdown of consumption in the different cohorts, it's about 80%. The top 80% account for nearly 100% of all consumer spend. The bottom 20%, which is like the cohort, I think of, what Dollar General argues is their group, they contribute low single digits % of consumption. The top 10% account for about 50% of consumption. That's what we observe in the wealth effect. So as long as asset prices remain relatively elevated, we probably still see strong consumption in that cohort, which is huge. And then when we look at companies like Visa, American Express, Bank of America, JP Morgan Chase, on their commentaries around at least credit card consumption looks to be still relatively strong. And then when we have some siloed experiences from Booking, American Airlines, I think United was actually positive outlook, but Delta Airlines, you get like, okay, people are spending maybe less on travel, but then the other companies that have sort of like a broader view on overall consumption are still telling us consumption strong. But the key caveat is consumption will probably only weaken if we see a sustained elevated level of unemployment. I think the banks were making an argument in their economic models of 6% and above. So that's kind of like what I've been trying to shift my focus towards, because especially with GDP, it's not going to be the biggest thing, but there was a lot of negative impact from the front loading of imports, right? So again, that's not the whole story there. Of course, I would not be surprised if we do see even like a technical recession, 2 quarters of declining GDP. But for me to start getting worried, or I don't know if the market will like see through that, I think it will come down, for at least myself, more about what consumption does. But it's a wait and see, honestly. It's so early.
Yeah, I mean, look, when we started getting into it, I don't think anybody thought the tariff situation was going to go the way it did. Okay. Mm-hmm. And I sent out our investor letter 3 days early before the quarter. And again, I go say, we're still in Boeing. We're going to keep buying more of this. We bought it last December, November, I forget. But I didn't think this tariff situation was going to go the way it did. And I think if that continues, which it looks like it's going to, yeah, you're going to get a natural drag down on the price on this thing. But I think, it is recession proof. And I actually hope, and I said it into our weekly report we send out, I actually hope this pulls back to like 160s again, so we can buy it and hold this, because I just don't see the bear case. And again, when we invest, I try to look at a lot of perspectives and figure, okay, well, what are we missing? What are we missing? What are we missing? And the Morningstar, I read some of their stuff, and their bear case wasn't like super aggressive. So I just don't see the big downside on this at this point, personally.
I mean, the only bear case I see is they have more QA issues, which it would all be self-inflicted. You have more QA issues, so the FAA doesn't raise your cap, and then you're kind of, that's the only way I think you have a negative. I don't think it's external, macro, all that. I don't think will affect the company fundamentally at the end of the day.
Yeah, if they get that cap lifted, we're off to the races, because there's so much demand, they just, it's not being satisfied right now. So they have the best problem out there for, well, some companies wish they had this problem.
Yeah, literally.
It's an envious problem to have.
And it's, I mean, I know you know this, Dan. Their backlog as of the last quarter was 560 billion, right? You're looking at run rate. I mean, I think last year it was 65 billion roughly in revenue. I think 66. And that backlog didn't include the F-47s. So you're looking at the demand. I mean, it's just, if someone pulls and says, actually, we don't need a plane, okay, someone else is going to want that plane. Like, you're not going to have an issue there.
Yeah, it's interesting to me to see, the headlines come out over and over and over and over on this. And I have a friend, you mentioned UAL, United Airlines, and he is, I think, a 20-year veteran there. He flies long hauls in the 787s all the time, because I see him 2 or 3 days a week. Like, I go and buy some smoking cigars, and I go to the cigar shop in Phoenix, and we talk the markets and UAL and Boeing all the time. And even he won't buy it because of the negative press and the headlines. And every time there's a headline on it, I see this and I go, it's sensationalized, which most things are in the reality, but people won't get past that. And the one thing that we were hammering on is their backlog over and over and over and over. And we own another company called GXO Logistics. I don't know if you guys know Brad Jacobs. So we own GXO. And I remember last earnings, they come out and they had this big contract, and the analysts were like, look, we don't know if this is a repeatable sales funnel. And then you go look at Boeing, and it's like, look, you guys have everything that every company in the world wants, and we're still talking negatively about it. And that's why I like public markets sometimes, because you get these mispricings, and if you get it right, you make a lot of money. And hopefully that's going to be the case with this.
Yeah, and it just seems, and you see this a lot with turnarounds, which it is a turnaround. I mean, is that people are so nervous that they're going to wait until the turnaround is confirmed to buy it. I mean, and then they'll be like, okay, but if you can get in and see the turnaround is clearly happening. I mean, another company that we'll talk about later, the turnaround is also happening, and there's been a dislocation in it, in my opinion. But you get to say, yeah, the turnaround's clearly happening. I mean, management said they're going to ramp up. I think it was it mid 40s or low 40s per month by the end of the year, I think, run rate on their 37s, I want to say. I have to go back and listen to the call again. But they're, endless demand that, and then the other thing I would argue is, you look at a backlog of 560 billion. I think the true demand is so much higher than that. But I mean, are you really going to push your backlog out much further than that? I mean, someone's going to call, we've talked about, because in this is going back to 2022, one of the companies that some people in Capital Mindset liked were like the air caps and the leasing companies, because they said just there is no planes being made right now. Like, there is such an endless supply, or endless demand and lack of supply because of the Boeing issues and Airbus not being able to ramp up. And so I don't know.
Let me interject that I think the wait list, last I recall, it's 10.9 years, 11 years, something like that. So to your point, it's like, you're going to call in and be like, yeah, I'll take it year 12.
Yeah. Yeah.
Add me to the list.
Yeah. Somebody made a joke to me one time. They were like, Southwest is going to go to Boeing, and they're like, hey, look, you have to wait. I'm like, oh, where are you going to go? Airbus? Okay, you got to wait too. So there's everybody's in the same situation. And I think from a business, I mean, what better business could you ask for? Mm-hmm. Okay, for this. And I think Trump, didn't they a month ago get an order from the U.S. government? Mm-hmm. I think, I don't know. There was an order that I think, because Trump's been, he changes his mind all the time, but he said something regards to Boeing that he likes them and wants to do business with them. They got an order from them as well. So I don't know. It's hard to get past the price action on it. But like I said, I hope this continues to pull back selfishly so we can buy more. So
for sure. And okay.
I just on that, do you guys recall the first Trump admin, the drama with Boeing? Do you guys remember that?
No.
So it was really funny. This happened similarly in the first Trump admin. He comes in as president. He's like, "Oh, we're getting screwed over with Boeing. We paid way too much for the Air Force One." And then they do some no, like the Boeing CEO goes and talks to him, right? And then 2 or 3 months later, he's like, "Oh no, Boeing's great. I love them."
Yeah. Everybody said something.
Boeing performed really well.
Yeah. So
well, one of the really positive things about this admin is what they've been talking about nonstop is cutting regulation or reducing regulations, and Boeing is a regulation constrained company. So,
yeah, I mean, we talked about that last fall as far as regulations getting cut. We had some small caps and mid caps we were on our list to watch to see, and I don't know, we're still watching to see what happens with these guys, and I don't know. We'll see. So when did you guys first get invested in this and start looking at it yourselves?
So go ahead, Fabio.
No, we've been watching it for quite some time. We have some members that have been keeping an eye on it. Particularly, they were looking at, first getting excited when they struck a deal with the unions. So they got that whole labor issue out of the way. And then at that point, Dan, who's actually also, he shared names with, he's another Boeing bull, and he was kind of getting bulled up on the company after, because he was telling us, he's like, I'm waiting to see what happens with their labor issues. And after that, we can kind of, touch base and reassess. And then I think at that point, I think it marks very close to Boeing's relative low, if I recall correctly.
It was October.
It was last year.
Yeah, October, I think it's either the offering in October or it was the union. I think they were pretty close to the same time.
Yeah. Within that whole time frame. And then so it was on our radar. I haven't purchased Boeing until recently. Liberation Day gave me a nice opening.
Liberation
Day. Yeah. My portfolio was liberated of the burden of having Boeing only on the watch list.
Yeah.
And that's at least my involvement. Andrew, I don't know about you.
Yeah, I mean, mine was mostly similar timing. I think roughly it was waiting for the labor issues and to kind of see any signal saying the QA issues have been resolved and we're focusing on ramping. Because to your point, this is now going to turn to a free cash flow story. Once the ramp goes in, and people I think a lot of firms and people are going to wake up when they see the cash flow start to come through second half of the year.
We can share this in terms of you have a bit of familiarity with an individual who assured you about the QA actually getting a lot better.
Yeah. So I know someone who works in QA at Boeing, and they said, we are no longer the focus. The production team is now the focus. So that's all they told me. And they're not a high level person or anything, but they're just yeah. So, before everyone was focusing on QA, now everyone's focusing on how can we get more production out.
Yeah.
And I said, oh, okay. And so then we went from there. But and so that was one of the signals to me saying, okay, clearly the company is now changing. And if you listen to earnings calls, they were saying the same thing. But sometimes people say things on earnings calls and they don't mean it. And so, and then I think I don't think people aren't listening. I think markets, I'm always surprised sometimes how slowly they react to what companies are doing. You listen to the Q1 earnings, I thought it was extremely positive. They're free cash flow positive second half of the year, which will run into next year. The ramp up that they're having in production, the acceleration on the ramp up, all of that, I was like, it's all there. I don't know. So
yeah, I think look, it's going. We commented back and forth about how I think in GMs how we both thought it was ridiculous. And my view on that is, the past, and I wrote a piece on our site talking about the past 10 years of ZERP and the BOJ carry trade situation. I think people, especially retail investors, I don't want to say boomers, right? Because we manage money for them. My dad invests too, but like, I think they're so accustomed legitimately to just buying these growth tech stocks over and over and over. And they ignore stuff like this. And you look at it and you're like, why is nobody paying attention? And this is what happens almost all the time. And it's, happened back when I started in 08, 09 doing this. But things start to go positive. And then when it goes positive, everybody wants it. And then that's the time like professionals or smart money, whatever we called it anymore, selling into them. Mm-hmm. So I think to go to your point there, I think a lot of people just don't pay attention to this because they're stuck in the idea of like, hey, we're just going to buy the Mag 7 and these like same names over and over. And then you miss this company that's going to perform. And maybe it's, I don't know if it's a two bagger, maybe it's 50, 60%. Again, this is my opinion. But I think they're going to be late on this thing. And I think the next pullback you're going to get will be the final shot, to get long this. So,
yeah. Which like in terms of a pullback, trying to say like what this market's going to do. We've been saying for a couple months now that there's this movement upwards. There's not really a concrete catalyst until you have, some actual deals and clarity coming through. And so, we saw this like rapid sell-off, probably too rapid, oversold territory. And then we see this rapid, upswing. We recovered most of the Liberation Day sell-off. But going after the pause day, right, we don't have any, clear catalyst, which could happen any day. There's like hints that there's going to be something this week. I don't know if it's going to be a token, deal or whatever, but, that could be something. So if we still see, I think it just comes down to that original point of what's going to happen to consumption. If consumption goes down and we actually get to something that's, akin to more traditional recession, not 08 style recession, but traditional recession. Because by the way, we always say this, like everyone is scarred from 2008. So when you say recession, everyone who's investing right now, their brains immediately go like, oh wait, oh shit.
I feel like we could argue, and I would be of the opinion we went through a recession in 22, but that's like, but since we didn't confirm it, I think it's like we changed the definition of what a recession is, and that's more typical than 08. 08 was nuts.
Yeah, that was I was 08, just coming out of university and managed my first portfolio, my first PA during then. And it was insane. It was the craziest experience. I remember Goldman and all these names. And it was interesting to say the least. So,
it's in the name, right? Great financial crisis. And every other doesn't have as fancy of a name.
No, and I'll say like my area got hit really hard. I grew up right outside of Detroit, and 2 generations of family working for Ford. So like that time there was awful. It was plants getting shut down. My dad's a Ford factory worker, has been his whole life. He had to move plants and all this stuff. So it was, he had to go back in the assembly line actually for a while. So
it was, look, that data that came out today was interesting. I'm curious to see how bad it continues to get, but that's like, aside from that, that's my only concern is really just the other data economically to see if there's going to be any issues with this, which again, we'll see, but it doesn't look good. So,
yeah. And hey, if it does give us that other opportunity to add at better prices, because Boeing today is showing really a lot of resilience. Market is still down, but Boeing is basically flat. So it's trading at what, 182, give or take. Give us 160 again. Pretty good.
Look, I'm hoping because I'll tell you. So we had a position in the first February. I had a position last fall. We sold it, bought back in February. Like that, I forgot what day it was. It was all February and March were a blur for me. I think for all of us because it was so crazy. We sold when the CFO came out. Remember, he came out. He got it on cash flow, and we had that huge ramp up like to 180s. So we sold a lot of the position then because I was like, look, we're in this market right now. I'm booking gains. It's not really what we do. We try to buy companies and hold them for like 3 to 24 months, usually. Okay. And we sold then and we pulled back again. I bought some more. And into this last earnings print, I cleared out a lot of the position again. We still in leap options and other option structures on it. but I hope that we pull back, and I think we will, so that we can add more into that position. And yeah, that's my view on it. So
Yeah, I don't. You do run a long short, right?
yeah.
Yeah, because my issue was with like Boeing and the other company we'll get to in a second. I had a hard time selling them because I was like, I think they're just still solid here, and I'd rather just increase my short exposure to the crap that I don't like rather than trying to liquidate these. And so that's just kind of how I went about that, because I agree, like we kind of went down a lot post tariff Liberation Day, and in my opinion, there was fundamental reasons that you could argue the market should pull back. Like you are adding uncertainty to earnings. As you can see from half the earnings reports, they're like, we don't know what to do for guidance. And then we just rallied through that whole sell-off. And you're kind of sitting back and going, well, why should we have rallied here?
Right.
And the only argument that I've seen is like money supply is increasing, but I'm like, okay, whatever. But I just had a hard time even looking at selling Boeing, or if we want to talk about the next company.
Yeah,
actually,
I mean, when we put on positions, depending on like the conviction, we use a lot of leaps with the equity, right? So that, you know, if we get to certain like soft targets we have on a company and we hit them, number one, I don't like sell everything at once. Like I'll scale out of positions, right? But then if things change, like in the narrative with Boeing, right? You know, they're working with the government right now to get, I think, approval on the maxes. If things change and there's new news, I own the options on the leaps from a lot lower. And I think, I don't know if it was you I was talking to you guys about, or somebody else about Joel Greenblatt. Was it you guys?
No, it wasn't us.
No.
I was talking to somebody the other day about leap options. And he goes, you know, I read Joel Greenblatt's book, and I was just going to say this to you. I go, you know, by the way, if you guys haven't read it, You Can Be a Stock Market Genius. It's funny title, but you know, Joel Greenblatt's amazing manager. I read it about 15 years ago, and it changed my entire view on, you know, talking about turnarounds. We go to the next company, et cetera, things we've done in our firm. I like the leap options because it gives me the optionality so far out in time. So with Boeing, we own a lot of the leaps. So I don't mind selling the equity and buying back into the equity. Not that that's what I want to do, but given the environment we've been in, we've just had to try to book a lot of paper gains. So
no, I think that makes sense. And yeah, I know Fabio really likes leaps in situations like you said. I think, well, and I'm more of like the natural, I don't want to say pessimist, but like looking at things and saying like, I don't know. And so I think we talked what was it, February, March, about getting out of most of our the leverage that was in the portfolio to look at. But I know normally, Fabio, you can talk about this. You do a lot of leaps on positions similar to that. Well, you'll have like a mix of commons and leaps.
Or synthetics, but yeah.
Yeah, synthetics. But we can talk about this company because, like you said, I think especially if you look at 2 years, I think this company is going to be really solid. And actually, that's another company that's showing strength. It's actually flat today. So maybe people are waking up to it, but it's Vans or VFC.
yeah,
And
we talked about it off air.
What?
We talked about it off air.
Yeah. And
yeah.
Because I didn't know that you had this. I saw you mention it, and I was like, in Twitter, you just said something like in passing, like you saw a lot of call options open up on it or something. I think you're maybe looking at order flow, and I can just say my opinion is the CEO Daryl Bracken, or is it Bracken Daryl? Amazing job at Logitech, where he was there, and I saw it come to Vans, and I had followed Vans and just watched it because people were talking. I remember people were talking about it before it fell, like the dividend people who were saying, "Oh my gosh, like look at this dividend yield." And I was like, looking at the inventory buildup and everything, and I was like, I think this dividend's about to get cut, but I don't know about that. And so I watched it go down, and then he came in and just, I mean, I don't want to say it's similar to Boeing, but it's a turnaround. But in a similar mind or thought process, I said, new CEO coming in who has a great track record. I think he can turn this around. And during the turnaround, I think I guess I was like the dumb money who got lucky, I guess, in a sense, where I was watching it turn around and just waiting. And then he's been doing a great job. He lowered I think they're at like a 3 times debt to EBITDA ratio, which before it was insane. And then it sold off because the tariff news, which I think is very misunderstood from them, because I don't think the tariff exposure is there at all, really. I mean, like very little. They even addressed it in their earnings call before it was announced to be this bad, but they were like, we don't have any exposure to really China, Mexico, or Canada, is what they said. As far
Vietnam,
as
they do.
Vietnam, they do,
Yeah.
but I think the concern I would be worried about would be China exposure. Personally, I think because like right now, 10%, I think they can eat that. 125%, I'd be like, goodbye. But I'll let you say like if what your thesis was on it, and because I know people know my thesis, but we can get into that.
Yeah, kind of similar to yours. I mean, look, in 2020, we took a company out of bankruptcy. This literally a golf shoe company. If I had it, I should have brought one out for you. We took this golf shoe company out of bankruptcy, and so it was a turnaround, right? And I understand fixing a company. We had a product from China, getting all the SKUs in place, and so I'm always looking for turnaround situations like this. And I remember, I wore Vans as a kid. I still have a few pairs, and one of my best friends, like, when I'm not lying to you when I tell you, it's like hundreds of pairs of these things. And he brought it up one day. I was like, Vans, like, oh, I forgot what that company's doing. So when I looked, I'm like, why is this down? So I start reading about it, and I go, okay, I remember the Supreme brand sale because it was like popular, and I used to see people talk about it. Then I got into it, and then the CEO is the main thing. So going back to like, the turnaround we did in 2020, on any turnaround situation, just like Boeing, you've got to bet on the jockey, in my view. Okay. Because you said something earlier on this call about, when CEOs get on these earnings calls, they can say whatever they want, and they do say whatever they want.
Right.
And the board says whatever they want because they show up 4 times a year, they get their money and they leave. So you've got to see who's leading the company. Like you said, he did a really good job at Logitech. He came in, everything, I think a year and a half ago, he's on CNBC. We posted it on our newsletter. And he goes, this is what we're going to do. Okay. Well, then he goes out and you're like, okay, well, he did this, he did this, he did this. So everything he said he was going to do, he actually did. And that's the best thing possible when you're getting a turnaround, or if you're investing in private companies, if you're giving money to an entrepreneur and they're like, this is what we're going to do, and they don't do it, well, you've got a faulty manager. So our thesis is pretty simple. Number one, the manager is a big deal. Number two, we think the legacy brand on all their brands, North Face, Vans, again, it was a situation which wasn't positive and it was going to turn around. And then number three, them paying down their debt, selling the Supreme brand. If you listen to 2 earnings calls ago, they got rid of a lot of their plane hangers, planes they sold, and they got the debt down. So it took solvency risk off the table. And then it went from a turnaround story, at least until January, in my view, to what I viewed as a growth story. Okay. So initially, all the issues got fixed. And then it's like open runway from there. But obviously, the news comes out with the tariffs and it goes from 26 to, I think, like 950, which is crazy. I told you guys on the call before we started, I've done this for 20 years. Our firm started a few years ago. I had my own private LP for a while. I haven't taken a paper loss like this in my entire career. So I definitely think it's oversold. But that was my view, and hopefully I covered all the points. If I missed them, I can go back. But yeah.
No, go ahead.
I have a strong suspicion. This is like we just said. Well, I think Andrew actually on this is optimistic, but between the two of us, we're like 2 people on your shoulder. Andrew's gonna be more, skeptical, pessimistic, short seller, and I'm gonna be like,
short seller.
It's all good. It's all good. So the optimist in me, and I'm trying to maybe read the tea leaves on like what the market is implying here. I actually think we are closer than not to some alleviation from Vietnam than otherwise. And I've been trying to keep an eye on Asian news from Asia, not from the West. Like West covering Asia sometimes is like there's a lag, and we've been noticing this lag, right? Andrew?
Oh yeah, we've talked about this so much. It's hilarious.
There's news that's like a week old, and it's like breaking news, and I'm like, oh, that's a week old. That was covered in like Korean articles like a week ago. But I'm pretty optimistic on something occurring with Vietnam, and I think the market is also kind of thinking that when I see this like relative strength in VFC, and what we saw, right, when we saw any hints of a deal, what did VFC do on those days? It was meteoric. It wants to jump.
Yeah.
It wants to take off. And I think that why I'm trying to sort of really try to build out a position here is because if I truly think, you know, the optimist in me, there's going to be, again, it might not be like a signed, you know, clear trading deal, but it just the starting steps, just the announcement of, you know, I'm saying, yes, we're going to go through with this. This is the starting of a formation of a deal. It will take about a year or so to actually get through, blah, blah, blah. But then you get the clarity of the tariffs are not going to go to, what was it, 45%.
Yeah.
That would be just, you know, off to the races where something like VFC. And isn't 60% of their sales international?
It's like 50. Yeah, 50 to 60. Exactly. So, and that's what I was telling you was, and if you looked, so there was, because before this, I owned Crocs because I thought Crocs people were misunderstanding it. But I sold Crocs because one of the things I said was, "Hey, dude, is 100% made in China, and 100% like sold to the U.S." So you don't want that. Vans, first of all, it's for whatever, I don't know what the reason is. It got hit harder than the other companies. Like, and that was my thing was, I was looking at this, and in my opinion, it should have been like probably Crocs hit the most because I think they have the most, but they are so cheap on a cash flow basis, so maybe that's why. But they had all this exposure. Vans has only 50% of their revenue. It might be more than that, but only 50% exposed to tariffs, and there's no China exposure. And so I was like super confused. And to your point, it's going through this massive turnaround into, like you said, growth. Now, the one issue you could argue, but this would be for any consumer discretionary, is if we have a macro pullback, there could be some negativity there. But I was just confused more than anything when I saw. I think I was like, I remember I was typing in CM. I was like, why is no one buying Vans here? Like, I was like, buy Vans. Obviously, yeah, VFC, but because and it just didn't make sense to me that getting into single digits again. I'm like, you rarely have an opportunity to have a turnaround company turn around and then be able to buy it cheaper. That to me is like a crazy concept. Because I think when he came in, it was around, was it like $7 or $8? Maybe it was a little. And then like once the turnaround started, you know, like you said, went up to 26.
Yeah.
And we've gotten confirmation the turnaround is working, and he has fixed the core problems. And then it's sold off now down to
It basically sold off to where they were last summer.
Yeah.
I think before the Supreme brand seller, which brought them in like $1.5 billion. And I was in the same situation as you, where this sold off, and I'm looking at it, and I go, "Am I going crazy?" So I go back and do our checks on our research, and I go, "Okay, maybe we missed something." So I'm going back through it again. I'm like, "I'm not seeing it." So I'm like emailing some other friends that are in the business, and I go, "Am I missing this? You know, what am I missing on it?" Because you're right. You know, Nike got hit, but not as bad as this. Lulu got hit, but not as bad as this. Restoration Hardware, they got hit. It's not the same business. Crocs got hit, but not as bad. So I'm sitting here looking at this, and I go, "What's the market missing on this?" And there's situations where, you know, I've been in where I'm like, all right, do we want to allocate more to this position? Because the market isn't seeing this, but we're seeing this. And it's definitely tough to do when you get, you know, I'll just tell you, our cost basis is around like 15. Because we pulled it in earnings, by the way, because we had this huge run up. We pulled back and I bought some, and then it drops like 50% on us. And I'm like, okay, do I want to add to this? Because it doesn't make any sense at all. The valuations there, the fundamentals all make sense. And we added to it, right? But it's the hardest thing to do. And luckily for me, I haven't been in those positions too many times in my career, but this is one of them where you have to have conviction in the idea and, you know, see 2, 3, 4 quarters out. And, you know, I think this is going to be back to where it was in January. I just don't, it doesn't make any sense to me. Maybe there's still something I'm missing, but I don't see it. So,
yeah, my only argument was like when I was looking at this, I said, okay, let's say you have a recession. Maybe that has 1 or 2 quarters, but 2 or 3 quarters, 4 quarters out, and then like once the turnaround started, you know, like you said, went up to 26. And then it's sold off now down to maybe that has a fundamental 20% hit on the stock price, well, then you're talking $20. That's 100% from here almost.
Yeah.
So it's just difficult for me to look at this and not be somewhat optimistic, because to Fabio's point, like a lot of times I look at this and kind of the way I think through this when I'm trying to figure it out is saying, well, if I was going to short this, what would I be looking for? And there's like nothing there like that I would be looking for that I was like, oh yeah, this makes sense. Like I'm going to put a short on or something. Like it's the opposite where I look at it and say, no, everything looks good.
Did you guys see that day where I think it was a month ago, and I think Fabio, you said it when it rallied, they came out and they did the 90-day. Remember the day Trump was like, you should buy today?
Yeah.
Okay? It was literally up. I don't know the exact because I don't have everything up right now, but I think it was up like 20 or 25% on that day alone. Like it's just repriced, okay?
Mm-hmm.
And I go, there you go. And here we are still hovering around these levels. So it's a similar situation to the turnaround. And I think, again, we look at turnarounds, we're betting on the jockey every single time. I mean, this guy knows what he's doing. And we didn't mention it earlier, but they brought in a woman named Sun Cho from Lululemon, who's a rock star there for a long time. Now she's running the Vans brand. And if you went through their Investor Day presentation, they talked through each one of their brands and went to her section. And I think she's going to do a really good job with the Vans brand. And then they've also got a lot of influencer marketing they've been picking up on. In fact, funny enough, I follow these comedians on Instagram. And one of them who I follow is hilarious, is doing an ads for Vans. And I think that's going to pay off dividends here in the future too. But I think the short term just doesn't make sense to me. And going back to, again, we all invest in private companies as well, but you don't get mispricings like you do in the public markets and in private markets. It's very rare.
Yeah. That move there, like I was saying earlier, it's like that makes me think that you just get any hint at something just working towards a deal, and I really don't see. One thing I wanted to note is the operating margins, right? These still have not recovered, although there is clear signs of improvement. And I think as far as like just looking at what sell side was guiding for, they're even seeing noticeable improvements in the operating margins going as far as 2026, 2027, and so on. So this still, like, I think we're just getting this mispricing. We're just getting another chance at something that was already shown. Like, to your point, the manager said, this is what we're going to do, this, and this. And he did this, and this. Mm-hmm. And yeah, you're getting that second chance, so to speak, which, I mean, this is what Andrew was pounding the table. It's like, this is great. This is rare. You don't often get this, with the caveat that the perceived risks, right, are misplaced with regards to where they're sourcing from, et cetera. And combining that with, like, again, my optimistic view that something positive will come about with Vietnam. Because if it doesn't, if there is really 46% tariffs on Vietnam, there's going to be pain. But
affects every company. Lululemon, Nike's affected.
Everyone.
So it's like we're all in the same boat at this point if this stays in effect. So, what's this saying about banks? It's like, if you owe the bank $1,000, it's your problem. If you owe them $100 million, it's their problem. So it's like, that's the situation we're in with these companies right now. So if this is in trouble, then we're all in trouble. And Bill Ackman has a massive position in Leap Options and Nike. And a lot of their stuff's from Vietnam as well. So, I mean, we're all sitting in the same boat on this. And you got to go back and look at the management and what manager is doing a good job, who's vested in this. They took off solvency risk. That was the biggest thing with this balance sheet when I first looked at this. And by the way, when we look at companies and turnarounds, we haven't talked about it, but the first thing I look at is solvency risk. Okay. Like, I mean, I want to see, are they going to be able to stay alive to like get through all the negative stuff? And they took that off the table with the Supreme sale and other asset sales. And that's not a problem anymore. So now it's just like, look, can you execute on reviving the brands? And that's what we're going to see, I think. So,
and North Face is still doing really well, right? Internationally, that's still a very popular brand. I think it has a lot of strength in Europe.
Did you guys follow? They did a deal with, not that I'm a fan, but the Kardashian clan. They did a Skims collaboration.
Oh no!
Okay. So last in the winter, they did a collaboration with Skims. It sold out online within like 7 minutes, or literally 7 or 5 minutes. The whole collaboration sold out. They crushed it, and so they'll continue to do a lot of these cross promotion brand promotions. And Skims is the start of it, and it's just going to continue to do well. And yeah, I mean, those are my thoughts there.
Yeah, I'm just, whenever I hear that, I'm just amazed at the kind of brand that the Kardashians still have, but that's a completely other side topic.
Don't hate the player, hate the game.
So,
but it worked. It worked. You know, look, I think I wrote a note. I was like, I'm not a fan of these folks, but they did a good job for us. So,
yeah. And I think like what he did as well as a manager, he identified some brands that at the time, I think he got a really good exit price on, like Supreme you mentioned, which at the end of the day, you know, that instant deleveraging takes that risk off the table. But he kept a lot of the really strong known brands. Again, the one I'm thinking about is North Face, which I'm fairly certain everyone in the chat, if you guys correct me, the Europeans, it's pretty strong presence in Europe.
Super popular.
And then JanSport.
Brand.
Yeah, by far.
There are 4 big brands. It's Timberlands, North Face, Dickies, Vans. Those are like and then you have things like JanSport and that, but like, I would say in the CEO will say their premium brand is North Face, like, and then Vans is a value brand. But anyways,
the Vans line's a big deal. I mean, we look, I don't do a lot of channel checks anymore. I think like 10 years ago we used to do it, but for the holidays, I went and bought shoes for friends, and I was in Puerto Rico at the time, and then also in Phoenix. So I was like, I was there. I went to their store, or one of the stores there, and they were selling out. In Phoenix, they're doing the same thing, and they've changed a lot of their shoe styling to fit the newer generation. If you go back and read through their investor day, their whole like PDF, they talk about the changes they're making, and that's due in large part to that Suncho lady from Lululemon. And I think the Vans, you know, last quarter they showed signs of turning and get around the right direction. If they get that brand going in the right direction, I think the market really wants to see that. And that accelerates this company into a growth story. And that was my thesis back before all this tariff stuff happened. So I think I agree with you on the North Face. I think the Vans is super important as well.
Yeah, I'm just saying, definitely North Face is their strongest brand, but I agree that like the incremental sale opportunity will be within Vans and some other things. I think North Face is their best brand and probably will continue to be, but the incremental sales growth is probably going to come out of those other brands, to your point.
Yeah, and when you get these turnarounds and they start getting that, true benefits kind of coming down through the income statement, you get something like an Abercrombie and Fitch comes to mind. Remember that turnaround? How insane that was, and everyone was just caught off guard with just like how quickly things improved. So it looked dire for a long time. I remember Abercrombie was just considered this untouchable, complicated mess, and then you had just the right manager. You bet on the jockey, and then before you know it, you're getting, what was it? Did it outperform Nvidia at one point?
During that run up, I think it did. Yeah.
Because it was touted as this. I know, of course, now it's pulled back because it's just like with all retail, but before
almost 197.
Yeah.
I mean, look, we missed that. I mean, that's incredible.
Yeah. I mean, we did too. So.
Oh yeah, no, yeah, we didn't. we were the sideline observers going, wow, like that's crazy.
Not that we're invested in it, but Aeropostale's on the lows too. So if we weren't invested in Vans, maybe I'd look. I don't think we looked at the balance sheet on that or income statements, but the Vans one, I hope it's going to be that case. And again, I don't get it. I don't understand. And again, I haven't seen one argument to explain to me why this got cut down so much. So.
Yeah, disproportionately to other. It's weird, and that's what I was saying. Like I was just confused at the same point. So yeah, no, but those are two positions I've been, and I think that's how I came across it. Because sometimes what I do is I'll go, on Twitter or whatever, and just see who's talking about one. I was like, oh, Boeing, and then I saw VFC, and I was like, is this guy?
Yeah, you know, I talked to a few folks about this.
Yeah.
I mean, and most of the time, the story's pretty straightforward on it. And you know, you talked about short selling. You know, early on in my career, we're short sellers a lot. I worked at this one firm, and we did a lot of short selling, like in 11 to like 14. And I look, you know, things from a short seller's eye, because I'm not pessimistic, but I look and I'm like, there's got to be a catch on this, and there's nothing on Vans that I've seen that I'm against. I mean, there's other companies that catch my eye, but we don't really short it anymore too much here and there. But
yeah,
it's very selective. So
yeah. No, I mean my shorts, and it's not. I'm not always. It's not like I'm trying to run like net neutral or anything, but like trying to look at sectors or typical stuff. I've been very bearish on solar for quite a while. That's a sector that I think is just going to continue to have massive problems, and a lot of those players are now coming into credit issues as their debts are maturing this year. So that's going to be fun to watch. Like Solar Edge as an example, they have a 300 million convertible note that's due in August that converts at $200 a share, and they're at 12. So we'll see what happens.
yeah.
So and
First Solar reported yesterday. Did you guys see that?
Oh yeah, and Enphase reported last week, and it was terrible.
Yeah, it's just taken to the woodshed. So.
Yeah. Yeah, and I've told I was short Sonova, but they went bankrupt. And then I think Sunrun's going to have a similar issue, where if you look at if you actually math out the modeling at current interest rates, I don't see how these make sense, because the model there is kind of complex, but they basically sell you a system and then instantly securitize it and take an ABS loan to continually funding like future builds. So these guys have like, I think Sunrun has 11 or 12 billion of ABS loans like payable on their book, on their balance sheet. And then you have to continue selling and continue, taking on additional asset-backed loans, because you're having to pay out these other ones that, and then, well, the other thing they sell is the tax credit, the carbon credit.
Yeah, that's been a big thing for a while.
Yeah, but so one of the issues that they're running into now, though, is that the credit markets aren't good, and they're just continuing to see declining sales. So when I see First Solar and Enphase saying, yeah, sales are worse than we thought, I'm looking at these two that are like massive credit risk. I'm going, huh. We'll see what happens there. But
do you guys short the equity, or are you guys using like option structures?
I do options sometimes, but generally I just go direct short on the equity.
Currently, I'm only short direct equity, but I'm only short. We have strong overlap. Andrew, again, he's like the go-to guy. I'll consult him and be like, Andrew, what's on the menu? But I'm short PCT, which is it's like this novel plastic company that's trying to create this way. Well, not create this way. They have this methodology to transform, used plastics into essentially like this new equivalent of virgin material, except it's way crappier. It was actually developed in-house by Procter & Gamble, and then they sold it off for virtually nothing. Turns out there's a lot of input expense, so it's not economical, and the company's like mixing it with virgin material to try to make the inventory viable. So it defeats the whole purpose. And another one that's like ridiculous in the sense like how much inventory they have stacked up that they're not selling. They keep promising that they're going to sell it. They don't sell it. And they have, of course, a lot of debt coming up. And people looked at, Druckenmiller buying some of their bonds, but like on, a pretty sizable discount. And it's revenue munis or municipals that was issued by the county that then gave them the money for like an ESG purpose, right? And it's something they had to buy back in the first one, but not to get into too much. And then another one I'm short is Applied Digital, which Andrew here has been very bearish. Applied Digital, and that one's been a hilarious like roller coaster ride. Which we've managed quite well. Again, thanks to Andrew.
I don't know if you've followed that company at all. That's have you heard of Applied Digital? or like know
No,
their
no.
story? So
What's the ticker on it?
APLD.
No.
Okay. Biggest issue with it is it's like one of those retail like stocks because it's like, ooh, AI data center, and people like get all excited about it without knowing what they're doing. You know, I'm sure, or do you know B. Riley? Like the
Yeah, there's somebody I follow on Twitter who's always posting about them. There's like a big short on those guys. Yeah.
Cojotes or
No.
There's a
Parrot
bunch of them.
Capital.
Parrot Capital. Yeah, yeah.
Yeah, good guy.
Yeah, no, he is. And I've talked to him a little bit before. Actually, it's funny. That's how I actually, because they were shorting Riley, and then I think Parrot was actually also shorting Cons, because I think that's how I found him. We were looking at this and going, whoa, 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 they're about to kill Cons like intentionally as part of like trying to keep themselves alive. But anyways, so it was founded by a bunch of B. Riley executives. So like off the bat, it's like kind of questionable leadership, but they start off as applied blockchain. And then in 22, because Bitcoin was down, because they were just doing mining centers, like Bitcoin mining, and they build the center and then lease them out, which by the way is terrible economics. But so then they say, well, now we're going to be applied digital, and we're going to build AI data centers. And they're building one right now. They're building one in North Dakota, and it's a 100 megawatt facility. Now, the issue is they don't have a tenant, and they're taking on $1 billion building project. And they have been saying, and this is like a quick overview, so I'm not going to get into the details, but they've been saying since January of 24, like, oh, we have a tenant they're about to sign. Like, they're going to sign, guys, like any minute now. And so, and it's just like this hilarious, just like reading through their transcripts. It's like, first I remember in April, they're like, oh, we're 6 to 8 weeks away from signing. This is April of 24. And then you fast forward to August, they're like, oh, it's just some paperwork, guys. Like once we get through the paper, and then you go to October and they're like, yeah, we're like in the final stages. And then fast forward to this January and they're like, oh, we're actually in late stage talks with several hyperscalers. And you're like, oh, and they said they signed a letter of an exclusivity letter with the person in 24. And it's like, oh, we're talking with several people now. And I'm like, oh, so okay. So then the person officially backed out. That's cool. And then you fast forward to the most recent. And if you look, they really flushed. It rallied a bit, but they flushed after the last earnings call because they basically got on there and were like, yeah, we don't. I mean, they didn't say it, but they were just like really deflated. And they said they were trying to sell one of their businesses. And I think it's because they're running out of ways to raise capital. Because they have a $5 billion loan commitment from Macquarie, which is a pretty big firm. But the thing is, the Macquarie will not give them any funds unless they have a tenant. It's like, unless you have a hyperscaler tenant, we aren't giving you anything. And then they have about 600-700 billion, or I'm sorry, million of debt already that they've had one credit facility they've refinanced 3 times in 8 months. Because like I feel like what happens is they get the loan with someone and then they make them refinance it, and they get it again, they refinance it. So at their current burn rate, they're going to be out of money by August. And so they're trying to sell off one of their business lines. And the way they spun it was, well, people aren't going to sign with us unless we sell this business line, which is like cloud computing, because it's a competitor to a hyperscaler. And I'm like, no hyperscaler gives a shit about that. Like, they don't care. And they're like, oh, plus if we want to be a REIT, this makes us a more pure play. So we want, and really what it is they're just trying to sell a business line to stay alive. And the business line loses 10 million a quarter. It's not like it's a.
And these are all B. Riley executives.
Yeah. So.
Yeah. Okay.
Yeah, exactly. And actually, the CEO's been selling his shares, but he's doing it in a very. He sold, I think, 1.5 million more or less shares.
Wait, you got to talk about the outage they had. That already X's them out from all the hyperscalers.
January of 24, they had a power outage because they put in bad transformers. And I know in our community we have people that work in this space, and I was asking them, I said, hey, how long of if I had a power outage, like, and you're a hyperscaler, how much would that affect your ability? Like, you wanting to sign me, and they're like, well, how long was the power outage? And they're like, what was it like? They're like, if it's like a week, like maybe I can deal with you. And I was like, well, it was 3 months. They were like, what? Their power went out their data center from January to April of 24. Like, and so if you look on their balance sheet, they still have a little bit of due to customer, and that's like paying back for money they charged them when the power was out, and they have to pay back the customer.
Look, I made a joke on Twitter yesterday. I think once I was talking to somebody, DM me about Snapchat and these companies. It's always interesting to, like, if you look at pubcos, there's always like a scheme from management to like rob investors.
Yeah.
Okay. And they do it in the most creative ways possible. And I learned this early on in my career back in like 11 and 13. We were shorting. I don't know if you guys were investing back then, but there were so many shorts on the worst companies in the world back then, especially like for-profit colleges. The one thing I learned is, like, every time we look at a company, I'm always looking at the management first, because you can always start there. You're talking about, B. Riley ex-executives there. You can always figure out, like, based on that, like, what else you're going to find as you go through it. So,
and the weird thing is, technically, they're still working for B. Riley. Like, if you look at it, they work for, I think it's 272, which is still owned by B. Riley.
yeah.
And he's still like the president of it. So it's really weird. And I always say this because, like, you can't, I mean, they could pull something out of somewhere and sign a tenant. Even if it's like, you then look at the agreement and they're losing money on like the megawatts that they're selling and everything. So I always say, like, the one thing I always worried about was like any short, you can't be overexposed, because there is risk that, hey, if something happens and you're wrong. But that one, I feel it's just a clown show. But yeah, he did a really interesting thing. And I told, I don't know if you follow Friendly Bear on Twitter.
Friendly Bear.
I think he's Nate Kopakar. He was also in B. Riley, but he was the one who I found out on Applied Digital. And I was talking to him. I said, the CEO just sold his shares of Applied Digital. He sold 1 million shares in like what I would consider the most B. Riley way I could imagine. Like, it was, if you looked at it, it was a form. I can't remember if it was a 4 or 144 or both. But you read it and you're almost confused, because like what he did was he took the shares and gave it to another company as collateral for equity in said company. I'm like, oh, so you're swapping your equity out and getting equity in another company, but that way you didn't sell. It just looks like you're doing some weird transaction. And so whenever I see stuff like that, I'm always like, okay, this is like super suspect. And we were shorting this around, I think my cost basis initially was around $10.
So I looked at the chart quick. So, I mean, it's what, four and change right now, right?
Yeah. Yeah, 438. So I still think, like, I mean, I don't know how this company ends. I mean, they always find ways to like live, but I don't see how this company maintains above like a $2 price at the end of the year, unless they pull it. If this company doesn't find a tenant, they're dead. Like, they, I think sometimes people look at stocks and don't realize their businesses, and like, the company's in the situation now where someone else has told them. So if you look at a credit market perspective, if I come to you for a loan and I say, hey, Dan, I want a loan. And you say, what is it for? Well, I'm trying to build my data center. Well, but don't you have a $5 billion guarantee from Macquarie? Why do you come to us? Oh, well, we're just trying to bridge. It's a bridge loan. You're like, yeah, but you already got a bridge from another company. So why do you need another bridge? It's like, is the tenant there? And I think this is what I was telling Fabio. I said, I think the credit market's done with them, because I don't see how like, credit markets aren't stupid, and a firm isn't going to come to you and say, you're losing money every quarter. I think management said they spend $40 million a month building these centers right now, and they're losing, I think through 9 months, they lost $120 million from operations. So, I don't know, you can do the math. That's like $50 million a month of cash burn. So if I came to you, I'm like, yeah, I'm burning $50 million a month, but like, I promise I'll find someone. It's like, okay.
Look, what's funny about these companies, to interject real quickly, is there is always, look, I promised we were going to talk about Carvana. I don't want to get too much into it. But there's always SPVs, okay, that these guys use to like siphon off the money. Okay, like I haven't looked at this company, but I'd be willing to bet if I went through this and you guys have, you could find like a money trail where these guys have taken it.
Oh yeah.
Like,
So I can tell you right now. In Q3, when the stock popped, the CEO directly sold shares, but I told you, he's still the acting president of 272, or the firm that had shares in APLD that then sold the shares in APLD in Q3 and Q4. So they were finding ways to kind of like working. And I mean, the B. Riley Asset Management president is on the board of directors. Like, it's still very tied. So,
Yeah.
which is funny too, because B. Riley is one of the companies that also covers them. Is always very positive on them.
Yeah, that's the
but, like,
craziest thing when they just increase the price targets out of nowhere.
But I mean, like, and I think we were talking to one of the guys in our community who worked in IB and stuff, and he's like, I remember I said, I can't remember how I said, well, sell side is saying this, and he goes, dude, that's not sell side. I was like, okay, fair enough. He's like,
Yeah.
you can't call. I was like, but it's just shorthand. But anyways, they always have ways to siphon money. And they've been doing this. This isn't like a new thing, because that CEO, Wes, he's like made tens of millions off this thing. I mean, he's fine. So it's, we'll see what happens. If they somehow pull a tenant out, I'm sure they'll get, a massive pop on that. And then the fun thing will be to read, what are they selling the megawatts for? Is this something where they're losing money for every, megawatt they sell? Because I could see them trying to do that. The issue is, I still don't think Amazon, because they have to get this, it has to be a hyperscaler. And so you're talking Google, Amazon, those guys. Anyways, and I'll stop, because Fabi can tell you, I love talking about train wrecks like this. This is why I'm
He's obsessed.
Yeah.
Like,
You sound like me like 12 years ago. Like, yeah, literally like 2011 to 2014. All I did at this firm I was with, we just short sold. Like, I remember Skull Candy headphones.
Oh, yeah.
Yeah, I remember those. Those things sucked. They would break after like 5 uses.
So we smoked them out. We smoked University of Phoenix, Corinthian. I mean, that era of like, it was just like easy short selling. So, it's funny, you guys, like, you bring me back like memories talking about like the investigative side of this stuff. I find it so hard to short anymore, like fraudulent stuff. I don't know if you guys see this, because like there's so many new market participants that they squeeze things, and it makes me uneasy to short.
Yeah.
Again, it really bothers me. So like, I'm very selective when we put on shorts. And even with the Carvana back in 20, we were shorting that. I mean, I covered like in the low 30s, high 20s, and it went to like sub 5. But I was so nervous then because of the market messing with it. So yeah, I mean, it's interesting to hear you guys talk about it.
No,
I mean,
scary.
Carvana defies all logic right now. It's up what, like, there's a member in our community who always makes the joke. It's like, because ever since that bottom in 22, it's like, oh, everything is just underperforming Carvana. It's just
literally
like,
everything.
Okay. What am I doing? What am I doing here?
Everything. What's funny is I was going to buy the bonds on them. When they did the Apollo deal, I was like, I'm going to buy the bonds instead of the equity on this. And I didn't pull the trigger on either one. Obviously, I regret it, but it's literally, it crushes everything out there. Yeah. I mean, better than like NVIDIA, and it's just impressive. And I don't know. I have a lot of thoughts on that.
I mean, it seems like, and this is going back to I don't know if at a 50 billion market cap, it's not this, but there's a lot of guys who say, and I never touched it because I looked at this and I was just like, dude, you saw like the momentum going that way, and I didn't see a catalyst for people to look at the actual accounting on it and be like, oh, this doesn't make sense. Like, you have to have a catalyst hit that before something's going to happen. I don't know.
Well, we can talk about our blunder. We can share with him. I had at one point last year, so mid of last year, we shorted cons to 0, and then King of the World, and my performance was peaking out at like 110%. and then Sonder happened.
Because Sonder was a company. It IPO. It was one of those shitco SPACs. IPO'd in 21, sold off a bunch, and I looked at it, and this was a company. They were like, it's an Airbnb, except they directly lease all the properties and then try to rent them out, and it just doesn't work. And like, if you looked at the CEO, his pitch was like, yeah, what we do is we just underprice everyone, and then like we are able to grow market share. And I'm like, oh, that doesn't work for very long. So we shorted it, and it was just one of those things where the company was literally dead. They hadn't made any filings in like 9 months. They hadn't, and the issue with that, and it's one of those things that I tell people, the issue was we should have covered before when it was such a low market cap. You don't want to mess with these things at this market cap.
I went from being up a lot on the short to if I didn't sell the day of at the loss that I did, I would have ripped my face off and then some, because you're looking at the chart. You see that.
What's the ticker symbol? So I can pull
SOND.
SOND.
Yeah, if you pull up like past year, you'll be like, oh.
Yeah. So the issue was, so I shorted it like at like I think it was 100 million market cap when we shorted it.
Yeah.
Somewhere in there, because it was on $4 or $5, and it got down to 10. And I was like, dude, we were just being greedy assholes. We should have just covered it. But we were looking at it and saying like, they're dead. There's no way they live. They come out with this announcement, and they're like, we signed an agreement with Marriott. And I was like, you've got to be.
Yeah, they're lying. Okay.
And what?
Were they lying?
Well, no. And so they're like, I mean, the press release always is like, is it actually truthful? Because it's like, we signed an agreement with Marriott and we just got like an extra $100 million.
It's like getting an LOI, really. It's the equivalent of getting an LOI, letter of intent.
And the way they calculated the $100 million was like, well, all of our interest now is PIK. So if you take the PIK interest and put it out to 26, and then we're going to sell preferred shares that are at 15% interest and convertible at $1. And if we sell so like it was like, but to be fair, it was legitimate in that it took away the immediate, because they were going to file probably like 2 days later if they didn't sign that deal. It just delayed when they would file. And so, that happens. But really the thing with that was like, I don't know what the fuck we were doing shorting at that.
Was it so they got short squeezed basically?
Yeah. Oh yeah. And it was, short squeezed, because it was highly short at that point, because I think, anyone's looking at it just going, I mean, why would you buy this? They hadn't done a filing, I think, in, like I said, 9 months or 10 months. They just were doing like their NT 10K and NT 10Qs, being like, we'll file when we can. And so that's basically what happened. And to your point, like, it feels like nowadays that these short squeezes, they happen a lot faster, a lot more violently.
That's why I wanted to bring this one up. It's like, to your fear, what you were just citing. Well, it's like, this is our example or our sample of that fear manifesting itself.
Oh, listen, like I remember I was young when I was on the desk and we were shorting. And I'll tell you another story. We were short University of Phoenix, like a lot. Okay. It's not like it's for money. And Goldman comes out one day and they gave it an upgrade, and the stock's up like 20%. And our P&L swung so much. And it's just like, I'm very green to the business end. And I look at the P&L and I go, we got to cover this. And they're like, look, this is all bullshit. Like, this is going to be lower. This is exit liquidity. And sure enough, they go like BK. But it's an interesting game to play, man. It's tough anymore because of the retail stuff, man. It's so hard because there's so many people into the market, and nobody reads a balance sheet or income statement. They just buy shit and moves it higher. So
that was the thing with Sonder that was super sketch. The like 3 days leading up to it were like 20% up days, each one for Sonder. And we're looking at it being like, why is this thing going up 20% each day? Remember how it was just like someone was walking it up? Remember that? People were buying it, like, and it was like fairly high volume. And I was like, well, maybe like it just sold off. Maybe there's some shorts covering, was my thought. Like, people are just covering shorts. And then like the announcement comes out and I was like, mother. So, and that happens. But no, I agree with you though, being scared sometimes. Although I think if you can time it right, you can create like really good shorting opportunities. Is like, because retail, like, and I mean, I get it. You could argue some of us are retail, but when I look at these Reddit, like I'll go on the Reddit boards, and like the one that I point to is the quantum computing stocks this past year. I don't know if you followed those at all, but it's like
Here and there, yeah. I mean, we look. I have 2 analysts that work for me, so
Yeah.
when they're writing our research stuff, like they'll like, hey, we're looking at this, and I'm like, don't put that in there. I see it through them, but
yeah.
Yeah.
Well, and I'll just say, like with the quantum stuff, if you look at it, I mean, you have a company that's burning 50 million a year that has 2 million in revenue, and it's saying we won't even have maybe a product for at least 5 years, trading at a 5 billion market cap. And it's like, and you go on these Reddit boards and they're like, it's the future, bro. Like, and they're like, and this is, I would just read through these and like, quantum is the next step after AI. And I was like, that's like, because they're 2 completely different things. It's like complete, but this is what happens is you have these kind of like wild cult followings around stocks ever since GameStop. It's just like, and I agree with you, that's what can make it scary. So and that's why sometimes what I like to do is go to Reddit message boards and find the ones they're like not talking about, because I'm like, okay, at least these ones I know like should trade on fundamentals. And like,
yeah.
So
So you guys do a lot of shorting, or is it just?
I do.
You do? Okay, so it's a lot. Okay.
Yeah. I do. I mean, I'm net long, but I do have a lot of shorts on. I think I'm like right now, because of how the market is, I think I'm 70% long, 30% short, and like I'll put that up to 100% long, 30% short if I'm confident or something like that. So I'm still always net long, because I've told Fabio this is like this entire year, like 25. My opinion, if I was just going to run off like my feelings, would have been like net short 100%. But like you can't do that. It's not going to work out long term. Especially, we know that we live in a country, in a economy where the stock market like sends direct signals to the administration. And so you don't want to be.
I hope so.
Yeah.
I hope so. That's one of the, going back to earlier conversation, is like, we were sitting on those lows forever until they did delay. I'm sitting here, I was talking to a lot of other managers, and I'm like, what do you guys think about this? And he goes, he's not going to let this go to lower because of the midterms. And I go, I hope so, because I don't know. We're interesting times, to say the least, man. And I don't know what these guys are going to do. It's interesting to me. So.
Yeah. As far as like for myself, I'm fluctuating typically between 5 to 12% short. So, always net long. And I've learned, from Sonder, for example, to curve the greediness a little bit. And on days of where there's a flush, like I said, because of Andrew, I was short APLD. And on that flush day, I covered my short, took advantage of that, and then re-entered as it kind of recovered. On my new entry, I'm down a little bit because I'm at like the 410 or so cost basis on this new tranche, but I just try to, on those big red days, lock in some profits.
Yeah.
Never again will I let Sonder thing happen, because there was a day where I think I was up 50-60% on the short already.
Yeah.
And it had that big flush day. That was a moment, if I could go back in time, it'd be like, the Interstellar scene where he's like, no. Like, take some profits off the table. But we were like, oh, this thing's dead. It's going to zero. There's no way. Same thing with like, from now on, I've been approaching that, and it's done me good. There's some cases where, it will flush even lower. We can talk open door. We don't have to get into that, but I struggle with open door because since at least for my broker, they force me to hold a lot of collateral on the side. Because it's under $1, and I want them to do a reverse split because it's a broken business model. Their competitor OfferPad is basically dead at this point.
I was short 2 years ago. Open door.
Oh,
okay.
Yeah.
So
yeah. So okay. It's one that I just, if they were over 250 a share, I'd stomach for me a little bit more to just hold that collateral there, but. It is what it is. There's other opportunities, but yeah, I'm very long most of the time. Actually, not most of the time, all the time. My shorts are just fluctuating. Right now, I'm closer to the 10% mark. Or yeah, I'm like 7-8%. So not at the 12, but not at like a low point of, a couple low single digits. But yeah,
do you now you're just mostly long, or are you?
I'm always mostly long. I'm never mostly short.
I mean, look, normally like 80-20. We don't run any leverage, right? Look, in my personal accounts, I'm more aggressive in what I do personally, so I trade a lot of like futures.
Okay.
So when I short, I'm shorting WTI, S&P, NASDAQs. I just don't short even in the investment firm. Really anything like mid cap, large caps. I don't go to small caps. It's just too tough anymore for us. Back, like I said, 10 years ago, I was into it, but there's just so much more opportunity in long side positions and companies out there that are mispriced. So, but we have to, because of, trying to stay, not tied to the S&P when we manage money. I have shorts here and there, so we do a lot of index shorting through spreads, directional stuff. I have some e-commerce shorts on right now because of the whole tariff situation. I just posted something in my Twitter last night from Jeffries, their sales and trading team, something over. They interviewed an Amazon person who sells on there. And I don't know if you guys saw it, but I'll send it to you if you want to see it. And they're pretty bearish. And, there's stuff like that where it's so obvious that I'll short. And I prefer if I can short a large cap or a mid cap, because the rest of it, man, it's so sketchy to me anymore to mess with. So, yeah, it's 80-20 just to answer the question.
Well, good thing you brought up Amazon, because that is one of it's been along for a while for me. I haven't, managed the position too much. And that's the one that right now on this earnings report is the one that has me the most nervous, if I'm being honest.
They report today, right? Or tomorrow?
Tomorrow. Meta reports today. And so Meta still won't give us the guide. Well, not the guide, but they won't. Maybe in their guidance, they'll tell us how they're feeling about e-commerce advertisement. But e-commerce advertisement is between 30 and 40% of total advertising spend. Temu directly is like it's low single percentages, but still that's not nothing. And so for Amazon, right, like I'll be paying attention, like my main KPI I'll look at is, of course, AWS, how that's doing, because that's the profit driver. But a large part of the story was the expansion in margins in retail. Advertising is going to now be under question. Like, how is that going to end up doing if there's struggle in the e-commerce space? Because advertising was growing really nicely, but now that's going to be a question mark. And so that is my long that gives me the greatest pause. But yeah, that's why when people have been asking me, like, are you buying Amazon now? I was like, I'm not buying. I want to see what earnings show us. If it goes down quite a bit, then I'll consider adding. I added a little bit throughout that Liberation Day fiasco, but nothing, too crazy. I increased the position by roughly 10 or so percent.
That's kind of how we've been too. We haven't, I talked to Business Insider, one of their journalists called like 2 weeks ago, and they were asking about our exposures. Like I think we're down to like 40%. The rest sitting in cash, even my PAs too. It's just, it's so, look, it's hard to allocate capital in a situation. We talked about turnarounds earlier. I don't know if you guys followed Estee Lauder at all, EL.
Yep.
Okay, so that was big on my radar last quarter, and then in Q1 this year, I took a position literally the day after earnings 2 months ago. I put it on and I go, look, we were up pretty heavy on it, pretty decent. And I was coming back from the Middle East. I was flying back the day before I was flying back at the airport. I go, you know what? This market's in trouble. I had to like dump the positions and I reduced our exposure, thankfully. But that's how I feel about a lot of companies right now. I want to get long, like EL, some other names, but I don't know about the policy, man. Until these guys provide a better picture of what they're going to do, it makes it hard for me anyway to size anything relatively where I normally would size it and leave it alone. Aside from the Boeing, the VFC stuff, the GXO, it's hard to get too excited about much.
Would you summarize this as a description? You need clarity.
Yeah.
For this to be investable. Yeah. That's why I've been saying that to a lot of members. It's like the problem with this market is a lot of market participants, they need clarity. There's not clarity right now. And so until you get clarity, there's going to be a lot of people on the on the sidelines waiting for that.
But have you guys seen the data on retail though? So most hedge funds, I have a friend who works at Schoenfeld. He's a PM there. They made him reduce exposure a month ago. And a lot of long short has reduced exposure pretty big. And if you look at some of their data, retail has been buying this dip. It's not the funds. Okay. And I think there's an interesting, thing going on there. And I think retail is going to be wrong on this. I mean, that's my view, and it's contrarian, but I don't know. If you can't get clarity, how do you invest? And that's how I feel about a lot of this market right now, even individual names.
Yeah, I don't know. Like, I kind of agree with you that the question is, how do you find names that are economically not going to be impacted by this? And it's very difficult.
Do you guys invest in international equities at all?
Yeah.
Yes.
Okay.
Yeah.
So one of my biggest is Beazley out of the UK. It's just an insurance co. And so coming into the year, I liked because I understand the UK market a little better, although IFRS reporting makes me want to like shoot myself. But I understand that a little bit better. Then like it's easier for me to go through that than some other countries sometimes. So I was in that one. I was in IWG for a bit, but I closed that. Are there international companies that you're in?
No, a lot of Japan right now. That's like the first quarter. A lot. I mean, we put a lot of money to work out there because I just think there's a big shift happening. Toyota Motor we own quite a bit of, and some other names that I won't get onto air. But yeah, I mean, I was just curious what you guys.
Is Toyota Motor the one that's getting bought out, or is that
No, Toyota?
Okay, because Toyota Motor was buying out another Toyota. It was,
two different entities. Yeah.
I can't remember the name of the other Toyota, but I wasn't sure. Okay, so just Toyota.
Yeah, I mean, that's what we've been looking because I just don't. I mean, I don't know. I think the Mag 7 space. I'm real interested. I mean, you're talking about earnings. Amazon's coming up, and then Meta. I think Meta reports today too, right?
Tonight. Yeah,
tonight.
Meta
5
and Microsoft
o'clock.
are tonight.
And Microsoft.
Yeah.
So I'm very interested to see what these guys say, because I think it's going to dictate a lot of what's going to happen the next 2 quarters. Because I think Liz Ann Saunders from Charles Schwab posted something a week ago. I'll find it. I'll send it to you guys if you want.
Sure.
But the inflows into Mag 7 have increased again, and I want to see if this is going to pan out. I don't think it's going to, but I don't know. We'll see.
There's one near-term catalyst I kind of see as potentially adding to the momentum we've seen, but then after the fact, question mark. So some of the technical guys I've been speaking to, that they kind of see it as like us kind of retracing a little bit closer to the 6,000 before the whatever happens after that. But on like a fundamental thing, like what could drive us there is right now this kind of recovery that we've seen where we retraced quite a bit of the sell-off from Liberation Day has been driven by market participants except corporates. And then corporates buybacks are going to start coming online here. Every 2 business days after they report, all these names are going to be able to start buying back stock because they were not present at all in April. And there was nothing there. So, Meta, Alphabet, everyone just wasn't there buying up their own stock, and the shares were falling because everyone was, kind of, well, what's going on? So something that kind of just could add to the momentum in the medium term, I can kind of see when corporate buybacks start coming online. Alphabet, I think, as of today, can start.
Oh, huge!
Yeah.
Wasn't it 70 billion?
Yeah, and they can turn on the spigot again starting today.
And I don't know if you saw this. They took out $4 billion of debt, which like they have not done in a while. So they're taking out, and you could say, are they taking out $4 billion of debt to fund their data centers or their buybacks? Doesn't matter. What they're saying is we want to spend the money. So
we don't know. Yeah.
PayPal has a massive buyback as well.
Yeah, and they just reported too. And
yesterday, I believe.
So they weren't buying at all in April. Like they weren't there. And then now it's going to turn on. Another company that I have a decent size investment in a mortgage insurer, NMIH. Like the whole story there is share buybacks. And unfortunately, they weren't able to buy in April, but they have about 300 million authorized off of a 2.6 billion market cap. And they were the average price they bought in the last quarter was $36 a share. And unfortunately, the earnings were good and the market's rewarding them today. And they're going to be able to buy back stock starting 2 days from now because they just reported. So they were sitting at 33 for a minute. They were pretty resistant on the way down with this market. But all that being said, it's like, it's sometimes unfortunate regulations that it stops these corporates from doing it. But kind of just trying to map that out, we saw just all this upswing was market participants buying in retail, which Bank of America has an interesting view on this. They were saying that private client was the big portion of their buying volume, but the lower accounts, the smaller accounts, was actually a big portion of the selling. So it's like this, even in retail, there was like this separation, at least in Merrill, because I don't know about the other platform. This is just for like Merrill. And so it was like accounts that were larger were buying the dip, but then accounts that were smaller were pulling out. So I don't know what to take from that, but
yeah, JP Morgan put out a note, I think Monday or Sunday night, and their views was like tactical rally on a few things, and I agreed with them, but I don't know. I hope I'm wrong in the Mag 7 stuff. We came into 2025 pretty bearish because of earnings growth. We shorted it. I didn't make nearly enough money like we should have, like just a bozo. And I don't know if that's going to be the case going forward. I hope I'm wrong because selfishly, I like trading those names because it's so easy to trade the Momo on them. But I don't know. I guess we're going to find out tonight and this week with Amazon. So
we'll find out this week. Yeah. We'll find out this week.
Yeah. So
I'm excited.
So then
I just realized there was a comment section on this thing.
Oh yeah. Ever so often when we are asking something, like for example, someone gave us the percent increase of BFC on that one day, it was 27%.
Yeah, it's silly. It's silly. And I hope that thing rips everybody's faces off when they get this deal done, because I can't wait for it to be back. Look, I own so many leaps on that in the equity, and I don't know. We'll see. I hope.
Yeah, the only concern I have, and this is near term, so it won't matter with your leaps. It won't matter with the equity that I have either. So I guess, but is they're going to be the last one, I think, to report out of all of the companies in their industry, because their fiscal year just ended, right? So they're going to be at the end of the earnings season.
Yeah, they're back in.
Yeah.
I think the 20th of May is where they're at. So
yeah. So you're going to have, Nike already reported, but you're going to have all the other companies report before them.
Yeah, we'll see. So
yeah, one of our more interesting longs, I don't know if you've heard of them. Someone just mentioned it. Arista Networks.
Ticker
ANET. ANET.
Oh, I don't think so.
So this one is summarized. It's a Cisco killer.
Okay.
But long story short, if you think like regardless of what happens, the hyperscalers are going to be in this like still arms race, and they're still going to be spending in domestic AI infra or hypercompute infra. These guys are going to be one of the clear winners, and they're agnostic really to the silicon that people use. Well, there's actually like a little bit of a caveat to that, but for the most part, it's not so much of a hard bet on NVIDIA internationally. So like, for example, if you're really worried about, China exposure with NVIDIA and how that's going to kind of be impacted, Arista doesn't really care about NVIDIA's exposure to China, more so just NVIDIA's exposure to the domestic market, United States. So it's like one way to silo and concentrate on that trade, but just for like the United States, and you can ignore, the whole China scare, which I think is very valid, and there's a lot of concerns about that. But yeah, Arista, great balance sheet, all cash, piling on more and more cash. They don't really know what to do with this cash. I think there's a buyback program in place, but they're making more money than they know or really.
ANET, right? You said
ANET, and you can see that it had a really nice pullback where one of our guys who's not on right now, he's another analyst at CM. He's very familiar with this. In fact, as a daily profession, his day job, he works in this space. So he's one that's been the champion, pounding the table, and in fact, he was pretty good. His trim was really spot on. He sold some in the close to like the 140s, 120s.
Yeah.
When he said the price was getting a little elevated and it was pricing in a lot of forward earnings growth, and then it pulled back with everything that happened, and that's when he's been pounding the table and saying, guys, like, look in this is a because one thing in this space, like, all of them hate Cisco. They all claim, the people who work in the space are like, everything Cisco buys, they sort of mess up. But Arista is the golden child right now. All their product lines are beloved, so to speak. So
why did it take that haircut in January?
The view is like valuation relative to what?
Wasn't January DeepSeek?
Well, there was DeepSeek, yeah.
Yeah, that thing dropped like $1, and look, the balance sheet looks pretty decent as a quick overview, but that thing dropped, basically got cut in half.
Oh, off earnings.
Yeah.
Interesting. Okay.
Yeah, that was to your point. I think he was right on this at the time. It was just overheated for where they were at.
Yeah, it was trading at 50 times, where you had this massive multiple expansion from the year before, right? And there are optimistic expectations, but up to a point. And what Jesse thought was like, this is pricing in too much now. Now it's to his point, or to his opinion, it's actually fairly attractive. It's come back down to earth.
Yeah.
When it was just in the 60s was when it was really, but it's still at 81. It looks pretty good. This is just like one way to trade the whole AI infra without the China concern. It's one way to silo it out. There's TSSI as well, but
yeah, these things had a really good move off these lows.
Look at today. It's showing relative strength today, but yeah, if you see the hyperscalers all come out and say, "Oh yeah, like consumers dead, ads are coming down or whatever," but we're too afraid to stop this CapEx spend because we're too afraid of falling behind the others.
Mm-hmm.
This is going to be one of the clear winners of that if you're trying to play that.
And if you can do, I don't know how small cap you go. There's one company that we can maybe talk about offline that's really that has not recovered like Arista has.
Because this one's going to go public event, so we have to be careful with that one.
Yeah, so that one we'll talk about off air, but that one, small cap, we'll talk about. But if they say that, I think this one's 100% U.S. exposure. There's no international exposure in it. So if they're saying like we're full on board for the AI data center spend, and I tell people this, you don't have to I think it's a real thing, but you don't have to believe in AI. You just have to believe that the spend will happen. and so that's what matters. And so we'll talk about that offline. But that one I think is because it has not recovered at all, Fabio.
No. Yeah.
So
that one has right now, to my understanding, a very strong retail investor base. They haven't evolved yet past that. My knowledge,
it's so small. I don't know how you
it's
don't.
Small cap, yeah.
Yeah. So it's extremely volatile, which has been, some of the problems with just like kind of looking at it is like, you have to stomach that volatility, and earnings happen, and something can happen where there's just some miscommunication, or retail is not looking at it the right way, and it's going to move up too much or down too much. It's in both directions. It's like, it's a double-edged sword. But it's another interesting one. This one's more of like, it's pretty well followed. There's a lot of eyes on this one too, but there's some dislocation that happens here and there, both sides. Like, because again, arguably it was very dislocated when it was trading at over 50 times earnings. And yes, it's a great company. Yes, the margins are great. Yes, there's a lot of things going for it, but it's not. I don't know if it's 50x earnings worthy, but
well, a lot of your guys' members pitch you guys ideas.
Yeah. It's so it's like we consider like a club. So while I think I like to say that I'm the public face of it, Andrew comes on as well. He's also like another public face. And internally we just run, this is ICOM. So we do like a weekly show where we have a group of analysts that, we do this, on our off time, so to speak. And then we try to put as many pitches, but then within it, we built out like a network of people with, bunch of different backgrounds, and then they kind of find things. And since my job is like being like the public face, I try to, shift through it. So does Andrew, so does Jesse. And then we try to come up with, new pitches, so to speak, what we like, and highlight it if we can. Talk to the people with the, expertise in that field and try to understand a little bit more. So we have some people that are semiconductor engineers that have helped me sort of understand a little bit about, semiconductor design, what part's hard, what part's easy. And yeah, stuff like that.
Yeah, that makes the whole process 1,000 times easier when you get like an in-depth view on things. That's why, explaining earlier on Boeing, I talked to that pilot that's been around forever, and he was in the military even before that. But, I talked to him about things, and there's things on Boeing I didn't know about from reading and doing my research on it. And I learned, it helps me to understand the picture that much more. And I'll tell you a quick story quickly. Even on Carvana years ago, when we were shorting this, outside of the balance sheet situation, I met a guy who's pretty big on YouTube, became a good friend of mine, who taught me all these other things about the car business that I didn't even have in my short thesis that I learned from him. So it's super beneficial to have that.
Yeah. Speaking of cars, we have someone whose family we have two people actually in the server, but one guy dealership, right? So his family works in the dealership space. So then I get a lot of back and forth, and I'm learning more and more about, I learned a lot from him just talking to him about how the dealership business model functions. And then we have another guy who, just to add to the Boeing thesis, by the way, he does procurement for Boeing, right? He's another business that works with Boeing. He works with Boeing and a couple others, but Boeing's one of the big clients and in the procurement space. And all he said was like, hey, business is good. And as like a generalized update, business is good. Yeah. And he does procurement for a couple other companies, but he knows, he gets like data, for example, or he knows what the wait list is for NVIDIA chips. So it's like stuff like that, interaction with those people, it helps out a lot as far as like figuring out, where's the industry going? So like, for example, if it suddenly gets really easy to get NVIDIA graphics cards, heck, maybe, hey, that's a sign or something, right? He's like, there's no wait list. I went from 6 months wait for my procurement on NVIDIA H200s, and now I can get them in 1 month, right? Yeah, it's definitely a solid sort of like network built out.
Yeah, that's legit. I mean, like I said, the Carvana stuff with that YouTuber I met, the amount of stuff I learned from him, because he's been in the business forever, was just incredible. And I never would have known had I not met him. But it's good you guys have built this out. We have a smaller one. I have some buddies that work on the street that I talk to, but this is cool. You guys do that.
Yeah, and another one that's really good is a guy that works in the fintech space. He knows a ton about that space, and that's been very fun picking his brain.
Yeah,
fintech?
Yeah.
He's former IB, and then he pivoted into fintechs. Yeah. And yeah, I mean, he's been the fountain.
He's converted me, and I actually think Affirm is an very interesting company that I think a lot of people are misunderwriting, but that's a thing we can talk about at a later day.
No, for sure.
Awesome.
So summary, Boeing, everyone here on this panel is bullish. Do we have, this is just to end it off with like fun, non-serious price targets. What are we thinking about Boeing? Close your eyes.
What
we can do 12 or 24 months out.
12?
Kind of 12, yeah, just for fun. Yeah. You had to guess.
I'm sticking with 220.
220?
It's not bad, yeah.
Andrew?
It's so hard because the question is, where's the market at in 12 months? And I have no idea.
That's why I said it's fun. It's not serious. Disclaimer. It's just like
205.
205. Damn. Okay. The number I had in my head was for 12 months out, 198, 197.
Okay.
I wanted to be more pessimistic. I was like, because I'm the optimist. So you guys,
are these prices right rolls?
Yeah.
Yeah, look, I'm you're right. It's exactly where's the economy going to be? And that's my only concern is, I don't know.
Yeah,
I have no idea. I think we're higher than both your numbers. If turns out nothing burger, market's good, we get rollback FAA restrictions, we get some sort of calmness with tariffs, etc. We get you get some sort of discussions with China, more official, like out in the open. Because I don't know if you knew this, there was a Korean journal that reported that they did go, officials, like trade officials from China, went to the U.S. Treasury Secretary's building.
I didn't know that.
Yeah, it was last Thursday. Reported last Thursday. Not reported on Western media, but it was reported in Korea.
Okay, so the tweets that came out is that China said we're not talking to the U.S. was false, and then Trump saying we are. So I mean, there's this back and forth.
Yeah. So not to get into too much. So I tried to do some, macro breakdowns or also geopolitical breakdowns for the members occasionally. And again, it's a lot of influence from other people who know a lot more than myself or are more familiar. Basically, when I learned a lot more, it's like Dunning-Kruger effect. I was a bit more confident on like, oh, what could happen with Taiwan, et cetera. But then I learned a lot more about, Chinese policy. And I was like, oh, crap, I don't know anything. Like this thing is confusing. And so one thing I grew to appreciate, it's not in the West, we're kind of just told Xi Jinping has this like iron grip on power where it's like total power on him, but it's not actually the case. And it's actually a very beautifully complicated political ecosystem in China where there are a lot of internal faction infighting. So within the CCP, there's a lot of faction. But anyway, just to cut to the chase, there is a faction, the Maoists, who think he's too weak on the West, which is like wild to us. Westerners, we're looking at our news and it's like, he's really strong on us. And it's like, no, they're internally saying he's weak for the West. And so he can't afford right now to give off that appearance as though he's having any discussions. And a lot of the actions kind of reducing some of these tariffs, that came out. When did that news come out, Andrew?
Of them actually doing it?
Yeah, well, no, that they were going to do it. Because again, when it did happen, it was like, well, that's not a surprise. It literally was verbatim the reduction, because it was a reduction up to 0% on from 125% on all the goods that we already knew they were going to do because it was reported over there. But kind of stuff like that. It's but yeah, again, the Korean outlet reported on it, but for China at least, they can't have that appearance. It's very much an appearance game. But so if that happens and we get some sort of actual resolutions out of this, Boeing probably higher than 220. So
look, I hope so. I'll have to get these news sources from you guys because I listened to a lot of stuff, and I had some friends who worked at Citi in Hong Kong in the 80s and 90s, and I talked to them pretty much every day. And I listen to what they say about it, and their views are complete 180 from what we get here in the States. So everything you're saying is, tracks. But I'm curious to these other news sources you guys get about Korea, because it's not what I was seeing, and it'd be cool to get a different perspective. So
and the actual reports, like I think the problem is they're in Korean, and so you have to get like them translated, right? I think. Maybe did you have Google Translate it, or how did you?
Well, no. It's hard to even search for it, because when you go onto the website, if you search it in English, like you Google it in English, the title, even if it's translated, right? You translate the title, and you try to search it in the English format on Google, you won't get it. You have to search for it in the Korean characters. And so what I'll end up having to do is asking a Korean, say, hey, can you search for this article? It's going to say something like that, roughly translate it to Korean, and then search it, and then please, give me the article. So then I can then translate it. I'll get a rough translation. You can notice that some things are kind of weird. That's all you're going to get, right? But and same with the Mandarin articles, the ones written in Mandarin. It's you're going to get some alterations because Google's not perfect, but you'll get the idea out of it. But yeah, it's tough to find sometimes.
No, legit. That's legit.
Yeah. All right. And then last one, VF Corp. I had to do it. I just had to.
Dude.
12 months. This one's the volatile one. This one's like I think we're gonna.
I don't want to say what I think because I don't.
I'll go first to lay the groundwork. I'll be. I think if on an optimistic scenario, we get all this happening. I would not be surprised if we get close to 30. See, there you go. Now you guys can.
Well, the thing
go
is,
from
like, I can see a path to that. It's also like my base case, because once again, I don't know what the market's going to do, and I'm just operating under the assumption I'm not missing anything right now. So under that assumption, I'll say $19.
Yeah, I was going to say back to the highs 25, 26s. If they get these tariff situation in Vietnam done, I think, yeah, that's where we're going to be. But then again, it looks so hard with this one because of the economic data. If GDP gets worse and consumer spending, that's my concern. But maybe back at highs, we'll see. I mean, that's my view. But I'm happy to hold this thing for 2 years because Bracken's there. So in reality, this actually fits. You know, when we talk to new investors, it's 3 to 24 months. You know, and in the past like 9 months, it's been 3 to 6 months in our holdings because things have moved so quickly. So if this takes this 24 months, perfect. I'm fine with that.
Yeah, and for anyone watching when this goes public, again, those price target games, that's just all wild guesses. Like we were trying to highlight, there's a lot of moving pieces that will affect that. It's not investment recommendation or anything of the sort. And should also add the disclosure, we reserve, all of us, I think here, reserve the right to change our opinions, change our positioning after you guys see this video. So we might not even be in these stocks.
By the time you see us, yeah, maybe Vans rips to 30 and we're all out.
Yeah.
Maybe they come out and say, look, we were wrong on Vietnam. We're bringing it back. We're going to pay them. And we're at 30 and then we're out for sure.
Yeah. So just everyone keep that in mind. All right. Thank you so much for coming on, Dan. It was honestly a really, really good time talking to you here.
Yeah, you guys are great. Thanks for having me on.
Yeah, if you ever want to come on again, have another discussion on another long, more than happy to have you on. Everyone joining us in tonight, please check out Dan's work. And actually, I'll put on a link of something if you want to give me something for people to kind of check out, what you got. And
they can just go to longvolreport.com.
All right, longvolreport.com.
We put out a weekly podcast. My analyst helps me write. It's just like a quick summary of the markets, any companies that we're following, in the fund side that we're researching. I go through, put it out, and then that goes out every Saturday on Spotify, Alexa, and YouTube. And then the article goes out every Thursday. So we'll have an article out tomorrow. It's a quick read, and they can follow all this stuff there. So,
all right, Andrew just put the link for everyone to go ahead and check out. And with that being said, guys, thank you guys so much for joining us in today. Again, when you guys are watching this on the public side, for anyone watching public, this was recorded 4-30-2025. So, keep that in mind as well. And I'll be seeing you guys on the next one. Bye.
Great. Thank you.